Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a weak start as tensions between the US and China rise again, just ahead of trade talks in Washington. Maruti Suzuki has cut production for the 8th straight month in September. Production for the month fell 17.5% compared with the same month last year. The Supreme Court has rejected the Oil Ministry's request against an order seeking or the disclosure of an order seeking documents ahead of against Reliance Industries. The ministry had imposed a $3 billion penalty on Reliance Industries over output from the KG-D6 basin not matching targets. Higher gold prices continue to weigh on jewelry sales. According to Titan's quarterly update, the company had guided for a 22% growth in FY20 for its jewelry business. And Michael Mayer and Didier Queloz of Switzerland, along with James Peebles of Canada, were awarded the 2019 Nobel Prize for Physics. Let's talk about US markets now. US stocks fell on Tuesday after a series of headlines raised doubts that the US-China trade talks set to begin on Thursday will be successful. The sell-off continued despite Fed Chair Jerome Powell saying that the Fed will start purchasing US Treasuries again. Ritika Gupta of Bloomberg News wraps up Tuesday's trading action in this report.
It was a sell-off for US equities on Tuesday on concerns that trade tensions with China are escalating just days ahead of talks with the US. The S&P closed down around 1.5%, ending the day on session lows. The Dow closed down 1.2%, with 29 out of 30 members ending lower, and the Nasdaq closed down 1.7%. Meanwhile, Treasuries gained with the yield on the 10-year trading at 1.53%. Now, the risk-off sentiment came after a slew of headlines. First, with reports of the US planning to restrict capital flows to China, and then visa bans on Chinese officials linked to human rights violations. This really overshadowed comments by Fed Chair Jerome Powell that the Fed would resume purchasing treasuries. And all 11 sectors on the S&P traded lower. Leading the losses were the financials as yields fell. The banks took a hit. JP Morgan, Citigroup and Bank of America all ended down over 2% lower. And another drag on the S&P were the semiconductors. They fell the most in 6 weeks. They're really the whipping boy on trade tensions given their high exposure to China. Nvidia, Qualcomm and KLA Corp ended the day around 4% lower. Now outperforming, even though still down, with some of the defensive sectors, so utilities, consumer staples and real estate. And away from stocks, the risk-off sentiment continued. Safe haven demand rose. We saw Treasury demand rise along with the dollar and gold. Oil was also down, ending the day WTI trading at $52 per barrel. That's as trade tensions stoked demand fears. That's your US Tuesday markets wrap. I'm Ritika Gupta in New York with Bloomberg TV.
All right, let's take a look at the Asian markets now. I'm joined live by Rosalind Chin from the Bloomberg studios in Hong Kong. Good morning, Rosalind. How are we looking in Asia this morning?
Well, I think following on from Wall Street's lower close and also all these issues that have been outlined in that deteriorating trade relationship and overall relationship between the US and China, it will be no surprise that appetite for risk here in the Asia-Pacific is pretty low. I think this session we've got the Asia-Pacific MSCI Asia-Pacific Index losing more than 0.5% right now. Across the board, though, mostly red I can see on the major boards here. Let's start off, of course, in Japan. The Nikkei down 0.9%, topics down by 0.6%. Not really much to sort of help boost sentiment in the region. We've also got Shanghai Composite, CSI 300 and Hang Seng Index all trading lower at this point, opening lower just a few moments ago. Korea, though, closed for a public holiday today. In Australia, we had some consumer confidence numbers out of Westpac. The S&P ASX 200 is losing 0.8% at this point in the session. Westpac Banking Corp survey found that consumer confidence fell 5.5% in October, its lowest level since July 2015, and is down 8.4% since the RBA started cutting rates back in June. You would have thought that some of these rate cuts might help filter through to boost consumer sentiment, but it doesn't seem that is happening right now in Australia. So not such great news there in terms of consumer confidence. Overall, we do see these US-China trade talks which are happening on Thursday in Washington. At this point, expectations are looking pretty low in terms of the two sides getting to come to some kind of resolution on the big issues that they're facing. That, of course, trickling through to the sentiment here. It does seem, yesterday we were looking at more optimism. Today, a few more steps by the White House, perhaps a few more statements out from China, and we're seeing that all that sentiment change again. So really a pretty choppy outlook in terms of what will be happening on the trade front and therefore on markets for at least the next couple of days. Back to you.
Thanks so much for that, Rosalind. I do want to talk a little bit more about the trade tensions between the US and China. The Trump administration, and this is the latest, is slapping a visa ban on Chinese officials who are linked to the mass detention of Uyghur Muslims in northwestern China. The latest step comes just ahead of trade talks, which has been mentioned to you, that will take place on Thursday in Washington. Sarah McGregor and Tom McKenzie of Bloomberg News bring you more details.
Absolutely. There's a very dark cloud hanging over the trade talks that are now supposed to take place Thursday and Friday in Washington. These will be the first high-level talks of these officials since late July. And, in between that, there's been an escalation of tariffs. There's been the U.S. has signed a limited trade agreement with Japan. A lot of developments have taken place in the trade realm. And also there was the EU case that was decided at the WTO. So the U.S. is going to put tariffs on Europe. And so there's been, a mix of things happening. And I think ahead of these trade talks, things were looking like maybe the U.S. might go for a mini deal. Maybe there'd be some progress to be made. And of course, these latest actions really throw a wrench in that plan right now.
Tom, after every U.S. trade action, we have seen Beijing react in a more measured way. What have we heard so far?
Well, we heard some pretty forceful comments from the foreign ministry officials yesterday speaking in Beijing, saying that they would retaliate against this decision to blacklist 8 Chinese companies. They say that we should stay tuned. Now, that may involve non-tariff barriers. It may involve them publishing their unreliable entities list that would restrict the access for some US companies to the Chinese market. That is something we're going to have to watch very closely. They also said that the US should stop interfering in China's internal affairs. They were talking, of course, about Xinjiang and these human rights violations that the US are pointing to now as a justification for the blacklisting of those companies, but also, of course, this visa ban. Now, just for some context, Xinjiang is in the far western region of China. It borders Afghanistan, Kazakhstan and Kyrgyzstan, and it is there that, according to the United Nations, China is holding in detention camps up to 1 million Muslim Uyghurs and Kazakhs. And China says that this is all an attempt by them to tackle Islamic radical Islam in that region. But they have faced pressure from the United Nations and from reporting and from agencies who say that this is a gross human rights violation. In fact, Secretary of State Mike Pompeo said it was the stain of the century. Again, China saying that this is about them trying to tackle Islamic radical Islam. And again, this is another attempt opening up a new front in terms of human rights violations from the US side as they attempt to pressure China.
On to more updates from the impeachment inquiry that US President Donald Trump is faced with. The White House has said that the president will not be part of the inquiry that was initiated by House Speaker Nancy Pelosi. In a letter to Pelosi, the White House has termed the inquiry as baseless. Derek Wallbank of Bloomberg News gets you the details.
It's actually quite an interesting development here. The White House has said that they're not going to participate further in the impeachment inquiries. A series of stiff letters and things going back between the White House and Nancy Pelosi's office. We just got a response from House Speaker Nancy Pelosi right before I came on that basically said that this is further evidence of the White House trying to cover up President Trump's misdeeds. Said that this could be further evidence of obstruction, which is one of those charges. If you remember back to the Clinton administration, obstruction of justice was one of the things that Republicans tried to get him on. So this is a further escalation here. Now, our colleagues in Washington reported that the White House is trying to bring on Trey Gowdy. You would remember that name because he's a Republican former congressman who led the Benghazi inquiry. Very interesting move here. I've covered Trey Gowdy for a very, very long time here. excellent former prosecutor, one of the sharpest people that I ever covered in Congress, one of the smartest guys. But when he was running that Benghazi probe, he was one of the people that was demanding compliance from the Democratic administration. You might remember Hillary Clinton sitting down for hours and hours on end as the Democratic presidential front runner in a House committee. That was Trey Gowdy's panel. That was Trey Gowdy. So it's actually a really interesting, somewhat ironic move bringing Gowdy on right now.
Let's move on to some other news, in fact, into another continent. The Brexit blame game is heating up, with a no-deal Brexit looking increasingly likely. The pound sterling fell after UK Prime Minister Boris Johnson spoke to German Chancellor Angela Merkel and accused her of making a new deal impossible. Jody Schneider of Bloomberg News gets you the latest.
The two sides are continuing to talk, but as Donald Tusk, the EU Council President, accused Boris Johnson of playing a stupid blame game, it's hard to see that this impasse will be able to be resolved anytime soon, and it needs to be soon. There's just 3 weeks left until that Brexit deadline. That phone call between Angela Merkel and Boris Johnson did not go well. Boris Johnson told Angela Merkel, the German Chancellor, that it would be impossible for the deal to be reached if the EU continued to require that Northern Ireland remain in its customs union, in the bloc's customs union, and that is what is going to be required from the EU. He later said that Angela Merkel was making it impossible to do a deal, and that's the Germans took a dim view of that, as did Donald Tusk, and said Boris Johnson was the problem. So talks are continuing, but it's difficult. The Irish Prime Minister and Boris Johnson did talk, and they will meet next week.
We're headed towards that EU summit next week as well. So will there be a deal that the Prime Minister can take to Parliament?
It doesn't really look like it now, Sherry. They really haven't come up with anything. They can't get over that the Northern Ireland issue, and right now it's really just blame game. Now this could be part of Boris Johnson's strategy. He likes to take things up to the last minute, and maybe then he'll try to come up with some other kind of plan. But right now there really isn't anything on the table that makes it look like they can make a deal. And Boris Johnson is now talking about what comes next. And that what he's saying, and his government has come up with a 156-page report on what they're doing to get ready for a no-deal Brexit, and also telling consumers and businesses what they should be doing to get ready.
Now, Federal Reserve Chairman Jerome Powell is keeping hopes up of another rate cut by citing concerns about the global economy. Powell said that the Federal Reserve will start buying bonds again to avoid a repeat of the recent turmoil in money markets. Kathleen Hayes has tallied the odds of a rate cut. Find out what she has to say.
Well, it's hard to say. A lot of economists, and certainly when we look at Fed funds futures trading, they see a chance, about 4 out of 5, that yes, there'll be a cut on October 30th. When Jay Powell spoke to the National Association for Business Economics, their annual meeting in Denver, he did nothing to really confirm that, make it sort of a slam dunk, nor did he refute it. His speech was big picture. What do oil price spikes do to the economy? How do you really measure the tightness of labor markets? What about U.S. productivity? Is it really sagging as bad as we thought? The very end, he talked about what is data dependence now. First, he talked about the strength in the economy, strong labor market, wages are rising, solid job gains. And then in the next paragraph, he said, however, the global risks are rising. You can think of the trade war. You can think of Brexit, all of those things that he is obviously worried about. So the door is open, and he didn't slam it shut. And in the end, again, I think a lot of people figure this is certainly Jay Powell's way of saying, yes, it could happen again. Let's listen.
Looking ahead, policy is not on a preset course. The next FOMC meeting is several weeks away, and we will be carefully monitoring incoming information. We will be data dependent, assessing the outlook and risks to the outlook on a meeting-by-meeting basis. Taking all of that into account, we will act as appropriate.
Of course, a lot of people are pointing out there's probably not going to be any big numbers between now and the meeting on October 30th that would really change the economic outlook materially. But a very important thing, if you're a bond trader, if you're anybody in U.S. money markets, They are going to start buying bonds again soon, he said. People think that might be announced the October 30th meeting. They might even buy Treasury bills, very short-term paper, but guess what? It's not QE. Oh, did I already say it? Well, he said it again. It's not QE. It doesn't have anything to do with changing monetary policy.
Kathleen, let's talk a bit more about one of those global risks, of course, the trade war, inflicting more damage on the global economy. That's a concern shared by the new head of the IMF. What did she say?
Kristalina Georgieva became head of the IMF on October 1st, her first major address, and she did talk a lot about global threats may be rising. That's a risk. Everyone loses in a trade war. She sees a lot of uncertainty out there hurting the global economy. Here's what she said.
There is also, in my view, a risk of complacency. We are decelerating. We are not stopping. And it's not that bad. And yet, unless we act now, we are risking a potential more massive slowdown.
Risking a more massive slowdown. In fact, she said when the IMF issues its economic outlook at the big meetings of the IMF and World Bank next week, that they are going to downgrade their growth outlook for 2019 and 2019, and that's going to be the fourth time they have done it since October.
All right, let's now look at the headlines from across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We're going to start with the National Basketball Association, which remains on collision course with China. This after Commissioner Adam Silver defended free speech and indicated the league will not back down over a tweet about the protests in Hong Kong. Hours after Chinese state TV and Tencent said they would stop airing and streaming preseason games, Silver said the NBA will not tell people what they can or cannot say.
It's not something we expected to happen. I think it's unfortunate, but if that's the consequences of us adhering to our values, we still feel it's critically important we adhere to those values.
To the latest on Turkey now, the country says military forces will cross the border into Syria at the start of its incursion against Kurdish forces. The buildup comes after President Trump indicated the U.S. would not oppose the cross-border operation against longtime American allies. Turkey says it will move into Syria to take control of an area from Kurdish fighters that it considers to be terrorists. To Brexit now, the Brexit blame game is heating up with a no-deal divorce looking increasingly likely. Sterling fell after Prime Minister Boris Johnson spoke to Chancellor Merkel and accused her of making a new deal impossible. Sources tell us that Merkel insisted that Northern Ireland must remain in the EU customs union. Johnson says the EU's refusal to explore his latest plan paves the way to a hard split in 3 weeks' time. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Good morning, Agam. What's on your list today?
Good morning, Alex. We're coming off from a holiday, so let's see whether or not we see a pickup in trading because, last Monday we didn't really have as many cues which were working in favor of a lot of traction, of course. But for now, right there, the SGX Nifty is indicating a positive uptick, despite the fact that we've seen a little bit of more global volatility. As far as your indices go last Friday, we did see 0.5% cuts coming through. 6 straight days of losses. That was the big highlight, the big takeaway as far as Monday's trade is concerned. Mid-cap and small-cap indices, showing volatility as well. And the banking indices as well showing mixed picture, but the PSU banking index continued to remain under pressure. Let's talk about your ADRs. For now, weakness in Tata Motors, Infosys, and Dr. Reddy's. Of course, we'll be watching out for some of these IT names along with something like an IndusInd Bank as we move into trade over the next 3 days, considering earnings coming through. But what about fund flows? Well, we didn't see as much selling from FIs, but selling all the same, 494 crores. On the other hand, DI is buying stock worth 905 crores on a net basis. As far as contributors are concerned, gains of Axis Bank, ICICI Bank and Britannia were cancelled out by ITC, L&T and TCS. And in terms of stocks, or rather futures and options space, let's start by talking about the index futures. And we really didn't have too much change in the index futures, at least as far as the Nifty goes, nor was there as much addition as far as the Bank Nifty futures are concerned. In fact, there was a decline of around 12.5% in open interest. Moving on, well, we continue to keep an eye on 11,500 and 11,000 as far as your range is concerned, based on maximum open interest in calls and puts. And in terms of changes in open interest, it was 11,200 call, which saw a lot of activity. Of course, given the kind of writing that we've seen based on the kind of fall that we've seen on the Nifty. But as far as your VIX is concerned, it inched up higher by around 1.5% to 17.8, and the Nifty put call ratio as well came off even further to around 0.95, well below the mark of 1. Keep an eye on that one. We could see a bounce. And of course, in terms of stocks, we're going to keep an eye on Aurobindo Pharma, which is under tremendous pressure on account of several aspects with respect to the US FDA, Nalco, Torrent Pharma, Berger Paints. Berger Paints is one stock which actually saw fresh longs coming through. And in terms of stocks which are seeing unwinding, of course, Apollo Hospitals, along with NCC and Equitas Holding. NCC specifically in this case, let's see a hit of around 8%. So we're keeping an eye on that one as well. On the whole, Alex, it's likely to be another mixed day of trade with possible consolidation on the indices.
Thanks so much for that, Agam. Let's take a closer look at some of the stocks that are likely to be in focus today. Somit Sarkar is joining me now to tell you all about the stocks in news. Good morning, Somit. What do you have for us today?
Good morning, Alex. I'll start off with Aurobindo Pharma, where the company has come out with the clarification saying that none of the 7 observations in the Form 483 are related to data integrity, and the company is also confident of addressing them within the stipulated timeline. Now, Edelweiss in its notes said that the observations look a little serious in nature, while the other brokerages like Citi, MK, Goldman Sachs and JP Morgan believe that the correction is overdone and market seems to be pricing in the worst case for Aurobindo Pharma. Second stock that would remain in focus would be Titan, because they have come out with their quarterly update. Now, the company is saying that the jewelry division witnessed a fall in sales in the second quarter owing to sudden surge in gold prices. Now, the weak consumer sentiment in the market also led to moderation in growth of watches division to 7% for the second quarter. However, the eyewear division witnessed a strong 28% sales growth for the second quarter due to promotions and the other offers that the company had given. Now, according to HSBC, Titan's second quarter operating statement suggests that the retail jewelry sales grew by nearly 15% in August and September after a degrowth in July, while according to Macquarie, margin expansion is expected due to higher retail gold prices, while the high gold price movement will also lead to hedging losses for the company. Tata Motors would also remain in focus because they have given out the September JLR sales number. Now, the Jaguar September sales were down nearly 15%, while the Land Rover sales were up 7%. China, and the company also said that the China sales continue to recover in the September quarter. PI Industries will also remain in focus because they have launched a new product under the herbicide segment to control pest of wheat crop for domestic markets only. Lakshmi Vilas Bank, because Talwalkar Health has defaulted on payment of 2.4 crore rupees interest on borrowings of close to 463 crore rupees taken from Lakshmi Vilas Bank. Minda Industries, because they have acquired 100% stake of Delvis Group, which is engaged in automotive lighting design and engineering for nearly 21 million euros, that is close to 164 crore rupees. Now, this transaction is subject to appropriate regulatory approvals and is expected to complete in the next 2 months. Lastly, Indiabulls Real Estate and Indiabulls Venture would also remain in focus because both the companies are considering buyback of equity shares on October 11th.
Thanks so much for that, Somit. Do stay tuned. In just a short while, we'll have pre-open trade to talk about, and we'll take a closer look at some of these stocks. Meanwhile, let me take you through another story. After the NBA was blacklisted from the People's Republic of China because of a tweet from Daryl Morey, who is the general manager for the Houston Rockets, who supported the Hong Kong protesters, several other companies are said to have warned employees against making public statements with respect to the unrest in Hong Kong. Take a look. Let's take you through some of the stories you'll find if you look up the website BloombergQuint.com as of now. First up, the Supreme Court has dismissed the oil ministry's petition against an order seeking disclosure of documents that formed the basis for the levy of the $3 billion penalty on Reliance Industries over KG-D6 natural gas output not matching targets. A three-member international arbitration panel that is hearing Reliance and its partner BP PLC's challenge to the government's penalty had asked the ministry to share an array of documents. And mobile tower installations have reached only 60% of the intended target of 1 lakh towers annually, mainly due to delays in permissions from local authorities and other structural issues, according to the Cellular Operators Association of India. All right, that's all you need to know going into trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.
RP